Yo, what's good guys? Mo here, welcome back to another video. So in today's video, what I'm basically going to go over is a fairly highly requested kind of video. A lot of people always want to know, right? A lot of people find it easy to find their entry, right? It's not that hard to find your entry, but the thing is a lot of people either find it hard to actually hold their trade long enough, or some people close out too early, or some people just hold it for too long and they end up getting stopped out at break even. So the main topic of today is we're going to go over how to know when to actually close your trade. Telltale signs to let you know that price is not just pulling back maybe, and price is going to end up actually, you know, breaking your structure, whatever it is, and hitting your stop, right? There's a lot of different factors, but the first thing that I want to go over in the first point of the day is, first of all, ask yourself and identify what type of trading you're doing, right? You want to understand if you're scalping, you're day trading, or you're swing trading. This helps you to understand and to actually be able to hold longer, because for example, if you're let's say if you're swing trading, and I'm going to take this SR off really quickly, whoops. Right, so if you're swing trading and let's just say you caught this Euro NZD sell, right, on the weekly or the monthly, and you've been holding from here. You've been holding this sell, blah, 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 and you can see price is creating pretty large pullbacks sometimes. So price drops, you know, pulls back, drops, pulls back, and it keeps pulling back. This is a fairly big pullback, bigger than usual, right? Price, and then it drops again, and now it's pulling back again, creating a double bottom. So you have to understand what time frame you're looking at and what type of trading you're doing. If you're swing trading, these are fine. These type of pullbacks are completely fine, because you have to look relative to the time frame, right? You have to look relative to the time frame. So that's the main thing, relative to the time frame. What type of pullback is the market doing currently? Is it doing, there's three different type of pullbacks: a small, a medium, and a large pullback. And to kind of identify these, you want to look at the past previous structure in the market. So you always, for example, if you're taking a look at the daily time frame, right, and you're trading off the daily time frame, there is no point in you to go down to the 15-minute time frame and see, oh shit, price is actually creating you know, bullish candles, is very bullish on the 15-minute time frame, let's get out. No, you have to always make your decision based on the time frame that you're trading from. So if you are trading on the daily time frame, stop looking at the 15-minute time frame, right, and trying to guess, is price going to change to bullish from here? No, because even though price on the 5-minute is so freaking bullish, right, so bullish, on the daily time frame, this is just creating a pullback, right? After this big drop's creating a pullback. For all we know, it could just want to come up to this institutional candle right here, right, this last up candle before the down move, pushes up, and then boom, drops again. So that's the main point. Understand the trade relative to the time frame. Stop looking at other time frames such as the 5-minute. That's just not going to help you, right? The second point that I would like to go over is understanding your fib tool, right? So for example, you can really use your fib tool to kind of let you know where price could be pulling back to. So for example, we had this low being created, right, this new trading range, this high to this low, price starts pulling back. So we mark out this, whoops, wrong way, sorry. So we mark out this low, put it on this low, and we drag this and put it on this high. So we can see that potentially price can drag back all the way to 71. So we can still hold ourselves all the way to 71. When do we decide that this sell is invalid, right? We decide when price ends up breaking this high. So the main thing is that you want to look for, honestly, the biggest tip if you want to take out of this is just follow your structure. Look at what the structure, what type of structure is being made lately, right? This is the type of structure. You can see that's still going and following that downtrend. Even though you might not trade trend channels, sometimes I advise using them just to give you a rough idea of where price is kind of, how price is kind of playing out. You know, it might go out of bound a small bit, but overall it's kind of in these structures, right? So that's why I use trend channels sometimes. It doesn't mean I actually like sell from these areas, etc. But to understand that price could still want to come up all the way to the 71, 78.6, 88.6, and still could drop, right? It doesn't always have to drop from the open. If price does end up going up above this candle, right, above this close of this candle, then what happens here is boom, it could end up doing something like this, taking out this liquidity, dropping back, and actually switching to a higher time frame. You also want to pay attention to double bottoms being created. So for example, we had every single time price creates a new range, right? It makes a new lower low for the past month or so, right? So we see this low gets taken out by this low, goes up, boom, comes up, you know, takes out that low, creates a new lower low, etc, etc. The last trading rate that's been created, right, the last push for another low, we actually got a double bottom, right? So price came back, it didn't make that lower low. It couldn't make that lower low, so it reacted from this area. This is another telltale sign if you're in a sell to most likely probably start getting out. If once you see that bullish engulfing candle, or that, you know, whatever your confirmation in that sense is, that's your first telltale sign that you want to get out. Your second telltale sign, no, I mean, this isn't always the case. Sometimes this happens, but this is one telltale sign. If a double bottom is being created, right? The other big thing is support and resistance. Always mark out your areas of support and resistance when you're trading. For example, right here, I have my resistance, I have my support. I see a lot of people, because the way we trade, we say liquidity, you know, you want to target the liquidity, so much liquidity up here, right? You want to target this. But a lot of the time, if you think about it, if we notice for the past few months, we can see that price comes up days, right? And they come up and they react, come up, react, come up, react. This is a very, very strong resistance zone. What makes you think that the banks are actually going to decide to end up taking and clearing that liquidity? Sometimes it's not going to clear that liquidity. So you have to actually, when you're placing your take profit, be aware that there's resistance there. Stop trying to go for a trade and put your stop loss up, your take profit up above here, because you never know. Price could maybe want to come up, you know, touch that resistance and end up dropping, and it might miss your take profit by a few pips. You don't want that to happen. So the thing that I advise is always actually place your take profit below that resistance or support level. You don't want to chance it. You know, it might want to take it. You never know. You might it might happen, but you don't want to chance it. You just put it below that resistance or support level, right? The next thing that you want to kind of keep your mind on is fundamentals. Look at the fundamentals. Always be analyzing on daily FX. You know, however you do your fundamental analysis, everyone has different ways to do the fundamental analysis. Some people go deep. Some people just look at ready-made fundamental analysis. And also you can take a look at your currency meter. Your currency meter is very, very important, right? It tells you what pairs are strong for the day and what pairs are weak for the day. So that's another telltale sign. But all that depends on if you're scalping, if you're day trading, or if you're position trading, swing trading, whatever it is, right? Why? Because the currency strength meter might be important for scalping, because you're only maybe scalping for a couple of minutes, maybe an hour or two, right? So that matters. But swing trading, you might be holding for a much, much longer time, right? You might be holding that for you know, a couple of days, couple of weeks, whatever it is. So the currency strength meter, the strength for that day, it won't really matter to you. So you always have to think, the main thing that judges this thing, the master here, is your time frame. You have to understand what your time frame is, right? And what type of trading you're doing. If you're scalping, positioning trading, or if you are swing trading, right? The next point that I want to go over is, right, so for example, I'm gonna find nice institution candle, right? So, right, boom. I'm gonna mark out this institutional candle real quick. I really decided, I really wanted to put this out, this video out as soon as possible, guys, because lately I've just been absolutely busy and I haven't been able to keep up with the YouTube channel. You know, I've put in a lot of focus. A lot of you guys are signing up to the course. A lot of you guys are signing up to our VIP group. So I've been trying to, you know, put most of my focus there. But I decided that I haven't posted a video in nearly a week now, so I wanted to post something new for you guys. So you get a better understanding of when to actually close out your trades. So the next point that I want to go over is understanding rejections, right? So when price comes up to your institutional candle, you want to see if price rejects off that area. So if we drop down to the 1 hour time frame, for example, right here, you can see that price, let me see, you can see that price came up to this institutional candle, touched it, and straight away price very, very strong rejection. Once we see that very, very strong rejection. If we drop down to the even like 15-minute time frame, very, very strong rejection. Boom, price dropped. The minute it touched it, boom, dropped. That's a good rejection. That's a good sign. If you notice that price is playing around there for more than a couple of hours and it's just consolidating, right? That's a bad sign, right? Most of the time you want to get out. Now, there is another aspect to this, and you can look at it as this price could be contracting right here, right? And then wait for an expansion and then a drop. And that actually happened to us on GJ, which I'm actually not going to even explain on this call, the 3 market phases. I'll keep that for the course, but I'm not going to go over that. But that's just one thing that you want to look out for, rejection. So if price is consolidating there for too long, right, you want to get out, right? Simple as that. Another point. Right, so for you guys that are already on the course, right, and you've watched these videos, you know, you're kind of familiar with the concept, you understand that this is the contraction, the expansion, and then boom, the big boom, right? That's what happens. Now, if you take a look at this, a lot of people would have been trying to sell from this area. Why? Because it's resistance right here. This area is a level of resistance. Now, how did I know that I didn't want to be selling from here? How did I know? Because I noticed, and you got to watch your timing as well, right? You really, really got to watch your timing, because in every session you usually get a different direction, right? It doesn't happen every single time, but most of the time you always get a different direction. So for example, Asia usually consolidates, then for London Open you might get a fake rally, you know, price might want to push down, take out the liquidity from the bottom from the consolidation. And then for New York, now notice the time, this is 12 p.m. GMT. The minute it opened, right, the next hour at 1 o'clock, price started creating bullish price action. Boom, I see this is not strong enough, no confirmation. Come at 2 p.m. GMT, we get a very, very strong bullish candle, and here's your indicator. See how this very, very strong bullish candle pops in, just like so, right? I understand that this is a new session that's happening, right? This blue box right here is a new session. This is the New York session. We had the London session right here, a bit of the London session right here, and that went down. That was bearish. So once the new session opened, as you can see, this was bullish. Now look at this thing. The minute New York opened, it dropped down, cleared the liquidity, and this tricked people. This was manipulation right here, right? If we drop down to the smaller time frame, boom, absolute perfect manipulation, right? So what did it do? Anyone trying to buy from this support, so if we mark out this area, people would have been trying to buy out from this support. Price comes down here, they buy. Price comes down here, they buy. Price comes down here once again, and people are buying. What happens? They all place their stop losses below this low. And then boom, we get that big candle that comes in, big bearish candle, drops down below their stops, and ends up taking all their stop losses out. And straight away, the minute it happens, boom, bullish price action. Very, very strong bullish price action. And that's when you know that smart money are in play. And this is actually a very, very nice setup. If price does end up coming back down here, you know, that's a nice setup for a buy. Understand, as I said, if you want to be able to get out of your trades and to know when to get out of your trades, look at the sizing of the candles. If the candle is very, very big, something like this, you can clearly see that this is very bullish. People might have been trying to sell from here, right? People would have been trying to sell from here. This resistance right here. Price does that, it touches that, you know, rejects, boom, creates a bearish candle. I still wouldn't have sold here. Why? Because I take a look at the previous candles. If you take a look at 2 hour, this is very, very strong. This took out liquidity, you know, engulfed this candle. Most of the time, once you get a bullish engulfing candle like that, you're not trying to sell. You're only looking for pullbacks on a 15-minute time frame to buy. So that's a very, very big telltale sign, is to look at the sizing of your candle, right? Now, if you're day trading, right, the minute the candles start getting smaller, so for example, if you're approaching an area, let's say this is your area, and you have a big candle, then a kind of a smaller candle, you know, and then a kind of a smaller candle, and then it might create something like this. This is such a bad drawing, but sorry, you know, now you know that strength, stronger, but it's losing its weakness. Now it's created a reversal candle for us, and boom, this is when you know, okay, price could be ready for a pullback, or price, and as I said, that depends. If you are swing trading, you wouldn't close this because it could just be a pullback again and then drop again. If you're day trading, you probably want to close this by now because you just want to get that 100 pips of profit or whatever it was. If you're scalping, most likely you would have gotten at this big candle right here that was first created. That just shows that scalpers would have got out of here, day traders would have got out of here, and the swing traders were probably waited for here. So as I said, once again, you want to understand what type of trading you want to do, and then these points don't all apply to the one trading style. Some of these points apply to only swing traders. Some of these points only apply to day traders, etc., etc. Right. So another point, as I said, to understand is look at the sizing and how volatile these candles are. If they're very, very big, right, and you're approaching a zone, you're trying to sell from here, don't bother. Right. You want to notice that once a candle gets weaker and weaker, right, then price could be actually starting to reverse now. So that's pretty much it for today's video, guys. Right, this was kind of a harder video to make than usual because there's just so much points that I'm trying to cram into literally as small of a video as possible. I mean, this was 17 minutes long, but I had to kind of just put it all out on the table really quickly for you guys to understand. But we'll definitely be able to break it down. It's more broken down on the course and in our calls. So as I said, if you guys want to get access to our signals, our course, and our group chat right here, we called out a very, very nice trade on USD MXN this morning. Our whole team was able to catch 130 pips of profit on USD MXN, even though the market was fairly slow this week. But boom, we caught this very, very nice trade. Absolute snipe. Came up. Boom. This was the institutional candle that we got in from here. Just to show you that we actually send up signals using the strategy that we teach. Right? Boom. And price absolutely melted. Hit our take profit. The minute hit our take profit, reverse. So we were able to get it to get out at a perfect timing. So it's all about the precision, guys. No one went to get in, no one went to get out. And actually, one more point that I would actually like to mention is once you get a clearance of liquidity, a lot of time what happens is once liquidity like this is cleared, price is going to end up clearing it and going up, right? So you can see these lows were cleared, it wicks into that liquidity and then it pushes up. So that's another telltale sign that price could be reversing against you. And I mean, you can also account for reaction levels. They're very, very important. That's another video on the channel. So if you guys want to check that out, make sure to. So as I said, here's our website. If you want to hop on, we have the monthly, 6-month, and lifetime membership, which includes one-on-one mentorship with me. So if you'd like to get access to that, make sure to order it and then just send us a screenshot on our Telegram, and we'll get you guys started. So as I said, appreciate everyone for hopping on this video. Sorry if it's a bit longer than usual. Really didn't mean it to be this long. It was just we had to cram so much information in one video. So I hope you guys gained some value, and if it's not making sense or some points aren't clear, don't worry, just watch it over and over again. Hopefully they make more sense. And if you would like to for me to clarify any points, once again, just message me on Telegram and I'll be happy to help. Thank you guys for tuning in, and I'll see you guys on the next video.